I think everybody's doing their different jobs. In our case, for the banking system, I've said this before many times. It's very difficult for a retail bank to have a proper return with negative interest rates. And that was the awkward. What's normal now is that we are in a positive interest rate phase. And this allows us to have profitability which covers our cost of capital, which is probably the case, or we're very close to that right now.
So in terms of what you are seeing it's a real testament to Spain's economy, the fact that it wasn't a major issue in the very contentious first election we've just had as well. The economy wasn't the issue, it was all kinds of other stuff as well. So when are we going to see the results of what we're seeing from the central bank on your balance sheet, sir? Because again, your NII rising 30% year on year to 1.17 billion euros. You're talking about, you yourself has already said today that you're optimistic for NII in Spain in 2024 due to pending loan repricing. When do the effects hit you, sir?
Well, I think the effects are hitting the economy in terms of lower demand for loans. What we're seeing is more stable picture in terms of the growth of both the assets and the liabilities. In our case, for example, for the quarter, we were pretty much stable. So I think the ECB is reaching their goals by increasing rates so that the economy in overall terms is slowing down a little bit. In any case, in Spain, probably because of the weights that we have of sectors such as tourism, services, or hospitality, things are going better than in the rest of Europe or in some other geographies in Europe. And GDP is expected to go as high as 2% this year, probably well ahead 1% if compared to Europe. In the case of banks, it's different because, as I said, our profitability is also based on volumes, obviously, but in rates. And this has allowed us to print yesterday a pretty solid set of results with good numbers on every single line. Starting with NII, which will keep on growing. But also with very stable asset quality. Asset quality is not moving, and we don't expect it to move in the coming quarters, at least for this year. So that's what allowed us to increase our guidance of return on tangible equity towards the 10.5.
You've mentioned NII a couple of times, and it's a really big increase. But what about the NIM itself and the future of that NIM? You've seen the political furore that's building up everywhere about the lowish levels of deposit price increases for interest rates compared with obviously other loans going up or the other side of the balance sheet as well. And you also know the pressure we're seeing in the UK because you've got TSB. So are NIMs now at peak? Are they set to decline?
I don't think they're at peak, at least not in Spain. Probably they are at peak in the UK, but not in Spain. I think there's further reprisal to be made in the coming quarters, well deep into 2024, because of the asset repricing. On the other hand, we are paying for deposits, but we're also offering alternative to deposits. I think the big picture here is that the world doesn't end with savings, and there are alternative products which can bring a very good profitability to our clients. And that's what we are focusing right now. We're trying to offer our clients the best product for them. And this can be a savings, but it can also be a mutual fund. It can be a pension fund. It can be a guaranteed mutual fund and structured product. There's a number of things. For example, right now we have around 52 billion euros of different products which are yielding and are in the hands of our depositants right now. And I think this will be a trend going forward.